Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 308 for August 9th, 2021. We are recording this at 1 p.m. Eastern Time. My name is David Cosmeter. I'm the creator of Timing Research, and you should be seeing John Nyaradi's screen. And so I arranged for John Nyaradi of TradingGods.net to join us, as well as the option professor to moderate. So I'm going to go ahead and turn it over to him.
Okay, sounds great. Good morning, everybody, or good afternoon if you're on the East Coast. We're going to have a great show today because there's a lot to cover, a lot of big news coming out on a bunch of different markets, so we're going to try to cover them. Before we get started, John of Trading Gods is going to give us a little background on himself and also a little bit of background on Trading Gods, and then we'll go from there. John, what do you got?
Hey, thanks, Jim. Nice talking to you always.
Yep.
David, thank you. We're doing options at TradingGods.net. We buy and sell options. We do vertical credit spreads. We do debit spreads and iron condors primarily, so income and cash flow. And our objective there is to minimize risk, maximize return, and use the power of options. We focus primarily on the indexes, big tech, the FANG type stocks, and then some of the IBD, the Investor Business Daily lists that they have.
Sure.
So it's an exciting time, and I always enjoy these conversations. We learn a lot from each other, and it's great to be here. Thank you.
What's on the list of the IBD that you kind of gravitate to? Do they have a volume list, or how do they separate certain stocks that you might watch? What's the criteria on that?
Yeah, it's pretty cool. So they have one list called Can Slim Select, which is
Right.
based on the Can Slim program.
Right.
Then they have a group called the IBD 50, which are like 50 growth stocks, and they do some real in-depth analysis on those things. They're really cool. And then they've got an IBD Big Cap 20, which are household names.
Mm-hmm.
And then they've got one which I use quite often, the IBD long-term leaders. And so I feel like these are carefully vetted, analyzed. They track them, and I get the feeling, of course, a lot of the big institutions, RIAs, all those guys are watching these same things. So as a buyer or seller of options, it gives you a lot of good things, liquidity,
Yep.
interest, and
Right.
and we can track along with the elephants, so to speak.
Yeah, and the long-term leaders generally are large caps.
Yeah, I can pull them up here. Let's see if I can give you a couple of ideas here. So.
Yeah. Like on a Walmart, basically, ever since we had the pullback to 125, you could follow that up with a credit put spread all the way up, kind of thing.
Yep, exactly. Yep, it's the ones you'd suspect. Google, Walmart, Intuit, Microsoft. Let me just pool.
Here's a question I would have is, some of the stocks like Amazon or Google are very high priced stocks. And is it more difficult to do a credit put spread condor directional on a high price stock like that? Or is it a little bit easier to work on something like, let's just say a Walmart, or something that is priced a little bit more, lower?
Yeah, I think that it doesn't seem to make too much of a difference to me. The high priced ones seem to work fine, and then I'm looking here. We got PayPal, some of the usual suspects.
Yeah.
And of course, as you know, when you're buying options, you want to have a lower volatility, or selling them, you want to have higher volatility, so you can track all of that. Yeah, Walmart's on here, so it's interesting. IBD does a great job. I'm not a salesman for them, of course, but
well, they're doing a lot of research for you.
A lot of research, yeah, exactly.
You'd be up all night trying to figure out all those numbers. But you make a good point. When volatility has a spike, that's sometimes the time to look at it. A good case in point would be Amazon dropped from 3,700 to 3,300 very quickly. I would imagine the implied volatility of the puts went through the roof, and I would imagine that anything at 3,000 or less could have been sold at a pretty good premium. And basically, at that point, you're looking for Amazon to stay above 3,000 for the next few months.
exactly. And as you know, and I think it's taken me some time to figure out, volatility is the name of the game in options, right? I
Oh,
mean,
no doubt about it. Yeah.
buying or selling. I think it's widely missed or misunderstood, and I'm still learning about it. I know you're a master at it, and it's really
Well, I
that's
mean,
the
I've been
key.
doing it a
That's the
long
key.
time.
Yeah,
Yeah.
that's the key to the whole thing is the volatility of that option.
I
Because that's, of
mean, the
course, what.
first thing that I think when I see something big like Amazon is, hey, let's start looking at those puts. Or if I see advanced micro devices go from $70 to 120, I'm looking at the call spreads. You know what I mean?
Yeah,
Because
yeah,
the trees will not grow to the sky ultimately, and these are big companies. And when they make big moves, oftentimes it's followed by a slowdown in volatility or consolidation, and that's when the money can be made on the writing side.
yeah, exactly. So I think I would just suggest anybody who wants to trade options get into that part of the program because it's so important and it's just widely overlooked, I think.
Yeah, that and the fact that you're doing a spread puts a cap on the risk, which is a nice feeling as well.
Yeah, yeah, I think that's the key. I mean, as you know, when you buy an option, if you do a debit spread, you're way ahead of the game right away. And of course, selling, I would never sell a naked put. I just couldn't sleep at night, probably. So,
Yeah, well, I mean, like I say, that's the whole idea is that you don't want to put your account at unlimited risk.
yeah, yeah, and the naked puts, they just seem to suck up so much capital. It just doesn't seem
Well,
to
then
be
the
worth it
margin
for me.
requirement goes through the roof and you could get squeezed out on margin.
Right, exactly.
Yeah. So there's a lot of things that you can bring to the table explaining this to people because, again, there's a lot of newcomers into this area and, they have a penny's worth of knowledge and a dollar's worth of interest. You know what I mean?
Exactly.
And,
Yeah, and yeah, you could always everybody has to pay tuition, I guess. We all learn our own way and go our own way. But if any kind of shortcuts you can take or expedite or learn from my mistakes or your mistakes, that's a plus, I think.
Yeah, and I think knowing where your adjustments are going to be before you go into the trade, because a lot of times when you write options, you're under this assumption the market isn't going to move. And you know how Murphy works, the volatility of the underlying could be far greater than you think. So if that shows up, rather than getting a faraway look in your eye, you should have your predisposed adjustments that you are going to do if this low volatility or slowing volatility does not happen.
Exactly. Yeah, you have to. I mean, getting out is I think a harder and more important than getting in. Really, as you know, it's easy to get in and harder to get out. And especially like you say,
Generally
when you're
speaking,
writing.
do you try to hold these things to the strike, or is there other parameters you use to make adjustments?
Yeah, so when we're doing a vertical, the credit spreads, we
Yeah,
will go down to usually within one strike price. There are all kinds of different ideas about this.
yeah. There's a lot of ways to go. That's why I was asking. What are some of
Yeah,
the ways that you feel comfortable with?
some people say get out when you have 2x or 3x the premium. When you've lost that much, just close it then. That seems to me you get shaken out a lot when you do that. So I go a little farther down, closer to the short price, and then on the way down, when you get to around Delta 30, I'll start selling. Turn it into an iron condor, basically, and mitigating the risk. You can get out. You can really drive it down quite a bit. And then what you really don't want to do, of course, the kiss of death is if the short strike goes into money, because then it gets real expensive real quick.
Yeah. But even then, it doesn't go one for one with the market essentially until you get pretty deep in the money
Yep.
we're getting near expiration and there's no time premium left in them, right?
Yeah, exactly.
And then, of
And
course, when
so
they go in the money, you got to worry about getting exercise because that can happen. And then all of a sudden, you don't have a limited risk trade. You have a naked on one side.
exactly. Yeah, I haven't had much of an exercise issue. A couple
No,
times
no,
I've been exercised, but not very
no,
often. It
no.
doesn't seem to happen very much.
But if it happens once, it's too many, right?
That's too many, exactly. And then
All
the
right.
other thing,
So,
the other thing that's worth talking about a minute is the SPX, the cash SPX versus
right.
SPY.
We were going to get
I see most people wanting to go with SPY. SPY is fine. We buy SPY as a debit spread, but SPX is great for selling. I mean, it's a huge
Well, the
cash
volume
interest.
today on SPX is 875 million, and we're not even
Mhm.
half the day. So I would
Yeah,
imagine there's a few people trading it. So the liquidity should be reasonable, right?
yeah, it's really reasonable, and it cash settles. So you can't get exercised on that one. So it's a good,
Yeah, I got the volume on the SPY at 20 million. So I think that's playing a huge game of catch up. So that's probably a good idea for people to investigate SPX simply for the liquidity advantage.
Yep. Yep.
Good point. Okay, let's talk about SPX because our Monday morning quarterback here wants to know where you think the S&P will close on Friday, up or down, from the opening price today, which was 4437.77. So 4437, we're at about, my screen's a little late probably, but I got 4432. So where do you think we're going to end up on Friday? Higher or lower than 4437? Best guess.
We were higher last week. I think we'll be higher this week. Just looking at, if you can see my chart there, we have the EMAs. It's we're all lined up there, short to long, and we're approaching that top Bollinger Band. So my guess will drift higher as we go through the week. We've got some more earnings, of course, coming out this week. And summertime, the dog days of summer, so a slow drift higher would be my feeling.
What's your confidence level ballpark? Above 50 is more likely than not.
Yeah, above 50 for sure. I'll probably do later this week some bull put spread on SPX, something like that. So
if I hear the confidence 90%, I start thinking you're a Martha Stewart and you have more information than you deserve. You know what I mean?
No, you can't do that for sure. But yeah, I think this is a strong looking chart.
Yeah.
Today, no doubt.
Okay, there's no evidence of a turn. So obviously, if you're looking for a turn, you're just reading tea leaves that may or may not happen. But like I say, and reasonings behind it. You said earnings. Anything else on maybe your technicals, right?
Yeah. Technicals are looking real strong. The earnings have been good. It's summertime. I think, all those things add up to just this quiet kind of drift higher at the moment, unless, there's always the possibility of something that comes out of nowhere, but you don't see that here today.
We got a couple of questions that David had sent, but I was finding them a little confusing. Anyway, one of them has to do with what three sectors may go way down if the market collapses in the next, if it goes down and retests the yearly low. It sounded like something like that. So, if we're looking at the yearly low here, we are looking at a price in January of around 3,800. So let's just say 3,800 was going to get tested for whatever reason. The question was, what three sectors might go down with the ship? If you had an opinion, I'm just going to ask him.
Yeah, well, I think the small caps, I think obviously would be vulnerable, and then some of the really overextended, maybe some of the high tech ones that are so overextended. They've been going up forever here nonstop.
Yep.
Those two for sure, and what after that? That would be it, I think.
Well, they asked for three, so you got to come up.
Okay, got to come up with one more. Well, let's say energy, then I guess energy.
All right. Well, let's look at a couple of ETFs here just to see what the charts look like and see if there's any evidence that might happen. Rather than looking at energy, though, let's look at energy. Sure, why not? Okay, so let's look at IWM, which is a proxy for small caps, and see if there's any evidence that the gentlemen have started their engines that way.
Yeah, well, it's looking pretty ugly here, and it's pretty much, I see a lot of red and below all the moving averages. I'd say IWM is weak at best here, and certainly been in the sideways channel to down. So I think we're seeing that already. And again, that goes back to that topic of divergences. That. Why is
what is the time frame we're looking at here, John? This
is just a month. I think we can go out longer if you want.
Yeah, let's go out a little longer because if the guy's looking for what happens over the next 3 months, we probably want to look at least a 6-month graph or something like that, right?
Yeah, okay, I'll find something better here to take a look at. So
yeah.
I got a 2-year one. We have to just zoom in a little bit.
Yeah.
I just zoom in a little, and
it looks like either it's distributing or it's accumulating with that kind of sideways action over that time, huh?
Yep. Yeah, so that's going back to February there. That's from last 6 months.
Yeah. Because
So
like I
real
say,
side, yeah.
this thing went above 210, and it's basically been in a range of 235 and 210 since January. And you would think that that is, I mean, because I'm not a technical pro, but that's either called distribution or accumulation, isn't it?
Yep, it is,
Yeah.
and it's just, and this should be tracking more. This is what we always look at it, you want to see the transports, the small caps, the S&P all move in the same direction here, and this isn't. So that's obviously a point of concern, or certainly.
I tell you, the good thing about this is it's been a volatile enough between that a iron condor using 240 and 200 has certainly been a coining factory, huh?
Yeah, great,
Looking
great
back.
opportunities here, definitely.
That's a good example of a market where iron condors would have made a hell of a lot of sense.
Yep.
I mean, looking at that thing, it looks like it broke under 210. Katie bar the door, or if it gets above 235, it's happy days are here again, right?
Yep, I would agree with that. Yeah,
if you would measure that and then take it from the breakout point, it could get pretty wild.
Yep.
So that's an interesting one. And I think that's a good call. If we were going to roll over to the downside, this stuff has already deteriorated. And if it took out 210, Manny, Mo, and Jack could start selling. You know what I mean?
Yeah, that would be the old canary or the fat lady singing, as they say, right?
I don't know if Manny, Mo, and Jack is in your neighborhood, but that's the Pep Boys. You ever heard of Pep Boys?
I have, yeah.
Yeah, I don't know. Many people, I don't know. Is Pep Boys a national chain? I'm not even sure.
Yeah.
But it's a place where you go. For those who don't know, Pep Boys is where you go to fix your car, kind of like Meineke or something like that. Anyway, let's keep going here, and let's go to SMH, which is your semis, which again, have gone crazy. And AMD has showed that it peaked a little bit at 120 area, and it's now at 109. So, is there anything to the semis that would turn the world around if we did start breaking?
Yeah, I mean, they're in an uptrend here now. They're looking strong, and the new high here, this 271 just the other day. So this is bullish for sure.
You got an
Yeah.
RSI there where we could see if the new high was accompanied by a new high on RSI, or if there was a divergence?
Yeah, let me see if I can pull one up here real quick, Jim. Hang on just a second here. Yeah, it's a fascinating time we're in here right now for so many reasons, but here's the RSI. Okay, yeah, so RSI is up, close to being overbought, just hanging on there in the 63 level.
Mhm.
So that's
And
looking
while we
strong.
made this brand new high above the high of, where was the last high? Yeah, we made a new high in August over the July high. What was the July high on our RSI? Do you know? Can you see?
Yeah, it was down, let's see, about 60-ish. Yeah.
Right around 60, around this looks like it
Yeah,
would have
60.
happened around mid-month. Yeah.
Yep.
Mid-month it was in the 60s.
Yeah.
And now we're up at 270 and it's in the 60s still.
Yep.
So
yeah, it's been just drifting here, a little bit up and down, not getting overbought or oversold. Yeah, so it's confirming that, I think.
Yeah, a little bit. Yeah, a little bit. And what about the XLE, which is the energy?
Sure. Let me zoom in a minute. Yeah, so it's looking pretty weak here. It has been for some time. I mean, going back to June. Yeah, this is a downward trend across the board here.
Mm-hmm. That's deteriorating. So you got the small caps deteriorating. You got energy prices deteriorating, and the third one is the
transports.
the other one you thought might. Yeah, let's look at the transports. To me, that peaked out in May, and that's a little bit of a tip that things could change.
Yep. Yeah, transports, like I said, yeah, end of May is when it turns south there.
So it'll be
Yep.
interesting to see. So really the three that have already deteriorated would be your small caps, your transports, and your energy.
Yep.
So if you want to get things, or you were looking for things that might accelerate to the downside that are already weak, those three are them. If
Yep.
you're looking for the Yankees to turn into a farm club, then you're trying to go against the semiconductors, which have been very strong. Although, like I say, the AMD has definitely come off the highs a bit, and it looks a little like a space needle on that. Look at AMD; it looks a little like a space needle, doesn't it?
Sure, let me pull it up here real quick. Yeah. Yeah, it's had a good surge here starting in late July there. Yeah, it's been interesting with the all the chip makers and the shortages and all that stuff that's going on. But
Yeah.
yeah, but this is a strong chart here still.
But do you like if you looked at it on like a 6-month basis? Is there any kind of a little look like that 122 could be a peak that might last for a while?
Yeah, I mean, we're here at new highs for a long, long time. So,
Yeah.
it's coming back down to the 8-day average now. So, yeah, if this holds, it'll continue higher. And usually,
Yeah.
if new highs oftentimes beget new highs.
Yeah. What does the hollow candle mean? Or it doesn't mean anything?
Yeah, I'm not a candle chart. It does mean something, but I don't read. I'm not a candle chartist. The solid ones are like a lower, lower and the higher high and all that. But I don't read the candles themselves.
I just taking a look at the ADM 200-day moving average, see how far overbought it is, if at all. Let's see.
Yeah.
AMD. You got any moving averages up there?
Yeah, I've got just I have the 820 and the 50. The red one here is the 50.
What's the 50 at? Do you know?
Yeah, 92 about.
So 92, and then the 200 would probably have to be pretty far underneath that one.
Yeah, it's be way down somewhere outside here.
Yeah, let's just see real quick so we can tag a number to this thing. Yeah, 85.
Yep.
That's a pretty good amount of number. All right, let's see a couple of other questions here, and then I was going to ask you a couple of questions on some of the markets that are moving right now. What two reverse ETFs, if we were to retest the lows, would be worthwhile? So I guess he's looking for one of those direction deals where it's 3 times short or something like that. I'm not that familiar with those.
Yeah, so
I
those
know what they are, but it's not, after they had
Yeah.
a couple of them go out of business, didn't they have like a volatility one that kind
Yeah,
of?
that was XIV blew up. That was the
Yeah.
Volmageddon.
I don't need to get involved in that,
So
but people are interested. So what would you do with 3
yeah,
times?
so SH is in my view the safest inverse. It's the S&P short S&P, and it's not leveraged, but it gives you real good inverse coverage to the S&P. So if you want to, if you think Armageddon's around the corner, SH would certainly be a good option.
Yeah,
The problem,
it traded 1 million shares, or more than 1 million shares already today, so it should have
yeah,
some liquidity, right?
yeah, it does. It's a great one. I used to trade this quite a bit. The problem with the leveraged ones is that they adjust. The pricing is based on daily pricing. So if you
Yeah.
hold those long enough, you're automatically going to lose money. That's a
So it's like
very
contango working against you kind of
yeah,
thing.
yeah, that's a very short-term trade. SH gives you a little better edge.
Yeah,
And in my view,
things that you have to go to MIT to figure out sometimes are not worth it.
oh yeah, and when these things first came out, they were all the rage. They had the doubles, they had the
Yeah.
triples. Then there were a ton of lawsuits after that because nobody understood them. So I'm strictly, if I would not personally do SH anymore. I think you're have the same advantage or better advantages doing some real smart put option trading.
Yeah, in the last few years, you had a spike up at the end of 2018 that took it from like 26 to 34. So you did a little bit, and then it was right back in the toilet. And then obviously during the crash, it went from 22 up to 34, and then back
Right.
in the toilet. And now it's not only in the toilet, it's in the sewer system, you know?
Yeah, you can see that the COVID crash back in March, took this quick spike.
Yeah.
These things are very difficult to trade if you're not a
Yeah.
professional and really on them.
And in the environment, in the last few years, you've had about 2 times where you made any money. So it is
Yeah.
certainly the percentages have not been fabulous. And when you did make money on it, you had a very short time to grab it.
Yeah, and VIX is the same way if you're trying to trade the VIX ETFs. In fact, the probably the best short of all time is the VXX because that's it tracks the VIX index. Not exactly.
That traded 12 million shares today. So people are playing that game too. But
Yeah.
again, if you go back over the last 4 years,
Yeah, let's
in
look
late
at
in
VXX.
yeah.
It's really fascinating because it's if you hold this thing long enough, it's guaranteed to go to zero. Actually, I think they actually say that in their prospectus.
It's a hell of a thing to own during the crash. It went from 50 to 300.
Yeah.
But after
Yeah, you get it.
that jump up, it's been right down into the tank, down to here to 28.
So if you're a courageous trader, you could do bear calls on VXX, and if you can hang on through those spikes, you will make that is a pretty certain trade. I mean, there's no certain trade, right? But that one's pretty certain because
Yeah,
every few years they have to redo this thing. They do a reverse split, because it keeps trying to go to zero.
yeah. Now the thing is that I am noticing that volume has been rather large in May, June, and July, up towards 200 million.
That's
Which
interesting.
the last time it was anywhere near that kind of volume was during the crash of March. So for whatever reason, the volume has been very, very large on this. And maybe people are buying in it as, they figure with hey, I'm making all this money in stocks. Let's throw a little insurance. Let's throw a little insurance out there, right?
Right, exactly.
And
Again, this is not one you can hang on to for a long time though, because it will just erode,
yeah,
So,
like I say, it is a complicated thing here. Yeah, the volume on the other one, SH, has not shown any big life, but on the VIX, there's definitely people volume coming into that area.
yeah, so you'd have to guess those would be speculators counting on a VIX spike, and so of course, and the VIX always moves opposite to the S&P.
Yeah,
So that's why they call it the fear index, right?
Yeah. I mean, certainly if there's a inordinate spike, that's definitely something that would help here. I just wanted to see about, excuse me, one last question here, if we can get an idea, see if I can understand it properly. Let's see, give me 1 second here. But definitely there's some things, on the transports and the small caps that would indicate okay, yeah. What industries would go to the upside if the overall market was falling?
Well, usually the rising or falling tide lifts all boats, but the sectors that are, of course, the bonds would be a good place to be, and because non-correlated, probably commodities, and then like consumers, the consumer cyclical consumer sectors,
Yeah.
But if you really get into a seriously falling market, everything just is correlated.
Yeah.
You think you're uncorrelated, but you're not.
I just want to see something here because they're throwing the baby out a little bit with the bathwater on those metals right now. And I was just going to wonder how they did during the crash here or some of the big drops that we saw in the stock market. Okay, we got a pretty good drop at the end of 18. And the price of GDX went from about 17 to 24. And then we had a big drop there, but the GDX got hit just like everybody else.
Yep.
So that was no place to hide out. And of course, once the Fed printing press showed up, it went from 15 all the way up to 45.
All right.
But let's just see because I think, when you have a drop like we had last, like if we were going to go down and test the lows, it would be kind of hard for most anything to do very well. I was just wondering how biotech did biotech do anything? Because sometimes some of these medical things they don't go there. No, but they all got hit. Yeah, they all get hit.
Yeah, I think in that case, cash is king, and or bonds.
Yeah. So TLT would probably be the only thing that would probably look like it went up during that crash. But even that got hit until the Fed showed up.
Yep.
Yeah. I mean that didn't go down as much. No way. But yeah, TLT was clearly the place to be if you wanted to avoid the whole down move.
Yeah.
Because obviously they flood the market with liquidity. They dropped the rates down to zero. People, jump into fixed income, and so that pretty much was it. And
you can see that back here. There's the March right there. Yeah.
And the other thing that does well is the U.S. dollar.
Yep.
The U.S. dollar went up pretty nicely during the crash. So I guess you would say maybe TLT and DXY were two things that actually went up during the crash.
Right.
Everything else was on the Titanic.
Yeah, that's what they say. You're moving the deck chairs around on the Titanic, right?
All right, let's look at some things that are cooking here today. Two of them are in the biotech. One is BNTX, and the other one is Moderna, MNRA. So BNTX, they're in cahoots with Pfizer.
Okay, I got Moderna here. I'll pull that up real quick. So, was it mRNA?
I thought it was mRNA.
I got it.
See if we get there. There we go. So good size pop on that today, huh?
Yep. Yeah, it's doing great. I like Moderna a lot. I mean, look at it, up 15%. It's been up, for a long time going back here.
They certainly look like they're having a little bit of a parabolic move, though. If you look at the other one in a second, you'll see it's the same story. Obviously, people are looking for what's going to be the what do you call the booster shot?
The booster, the next round of vaccines, and they're saving the world, and people are getting more and more now. So yeah. And what was the other symbol?
BNTX.
D like dog.
No, Bobby, Nancy. Bobby, Nancy, Tommy, X-ray.
Okay.
BNTX. Bobby, Nancy.
Oh, Bobby, Nancy. I'm dyslexic here today. Sorry.
Okay. I do it sometimes. You try to type faster than your brain's working.
That's the old joke. Used to be dyslexic, but I'm KO now.
Right.
All right. So here we go. Yeah.
Same story, huh?
Yep.
Big blow off.
Yeah, these things have been hot. I do some trades on this one called Novavax. I don't even know what they do, but
they went in the tank the other day. I was surprised.
Yeah, they did. They got buried. Yeah.
Let's see if they're out of the tank here. Novavax.
Yeah, up 10 today, so they're around in the corner.
What's their symbol again?
I think NVAX.
Yeah, makes sense. But it was on the recommended list of some people, and it went in the tank a little bit, but then it's come right back up. Looks like it's really trying to fill a gap and all that right now, but it looks like a better value than the other ones, which are already so far up. You know what I mean?
Yep, exactly.
At least you're not buying something that's 4 miles from its moving average. That's the thing that gets a little bit scary. Like what's MNRA, just to give you an idea where the mRNA. Just want to get a little idea of where the 200 days are on this, so people can get a little bit of idea.
Okay.
How far away we are from things here.
I can.
All right, here's what we got. We've got a 200-day on Moderna, which is trading around 480, and it comes in at Survey says 167. So I would
Yeah.
say it's a little extended here, you know?
Pretty overextended. Yeah, in the 50s at 285, so it's way overextended,
Yeah.
obviously.
Which is great if you own it, but it's a little hard to start initiating a position up here, you know?
No, I wouldn't be thinking about that.
Yeah, actually, the more reasonable one price is the bigger one, which is Pfizer, which is only at $45, which is still extended, but it's not extended, I don't think, in the same fashion.
That's what PFE, I think, right?
PFE, yeah. And yeah, it's $8 above its 200-day and $6 above its 50-day, which sounds a
Yeah.
lot better than 400 points above, or
Yeah,
200.
yeah. This is looking real solid and just steady as she
Yeah.
goes here. Pfizer looks great.
Yeah. Okay, so we see those are two big guys in the news, and then the other stuff is the gold and silver went into like a little bit of a flash crash. I guess some guy was selling, some guy was selling a tremendous amount of gold, and then obviously the liquidity wasn't there, so they gave him a price that he deserves, which is like 1,600 and change. Now it's back in the 1,700.
Yeah, that happened yesterday, last night, right? Yesterday in Asia.
Yeah.
Here it is. Yeah, so it turned south here. It was just sort of flatlining, and then of course took this big dive here. So,
But GDX does have a lot of support at 30, and it'll be interesting to see if that 30 holds up.
yeah.
Do you see a lot of support at 30 if you pulled out to, say,
Let me pull
a
it up. Yeah,
longer term
GDX.
graph? Yeah, something like a 2-year graph. Yeah.
Yeah.
Because
Yeah,
we get
so-
big, when you get big moves like this, sometimes I go to the longer term graph to see where the long term support is, because
Sure.
a lot of these things, like what do you call it? Amazon had a lot of support on a long term graph at around 3,300. So it was not a surprise that it bounced out of there.
Right. Yeah, they're low in March is 16, and then if we go to the weekly, we can see what that looks like. And again, these multiple time frames are important. You gotta have the wind at your back. Yeah, that's so 30 would be the low here back in March. So
Yeah, and it also was the high of a previous year, I think.
Yep.
So it really is a big intersection.
Yep.
And so yeah, you can see the highs of if you go back a little bit, you'll see the highs were at 30 in 2019, and then 2020 before the drop. And then when it came down recently, it only came down to like 31 and bounced. So it'll be very interesting to see if they can hold that 30 level. And if they can, it might be an interesting thing to take a look at.
Yeah, and it's at the lower Bollinger here, so it could be certainly that's a good solid floor, I would say.
What about on the silver?
Hang on a sec. Yeah.
I thought 20 to 22 was a pretty good area where it might hold.
Yep.
If you go back, to the longer term graphs.
Yeah, this is the week here. I'll go back to the daily here. Let me switch back over here.
Yeah, because its takeoff point was right around between, I guess, 19 and 20. And so if this thing were to go down there and then consolidate and make a turn, that would be the neighborhood where you could probably, and today it did hit 22. So
yeah, 21.64 on the SLV. Yeah.
So 22 or 27 was the low. There was obviously some buying down there because you're $1 off the low already. The low of the 52 weeks is 21.81. So that's the lowest it's been at in 52 weeks.
Exactly. Yeah, I think it's looking pretty weak here, obviously. I don't know. It went with gold yesterday. Obviously, did the same type of move.
Yeah. Some people are thinking that the commodities made a big historical low in March of 2020, and that there's a, secular bull market going, a super cycle that might be going. So, if there's any truth to that, very big drops is when you might want to put your periscope up and see if there's any value.
Yep. Yeah.
Because the world is growing a lot, and the wealth is growing a lot, and since the travel is not going around, they want to build things, and they want to go out and eat and all that kind of stuff, and they want to improve their diet. So, there's not unlimited supplies of coffee, sugar, soybean, not unlimited supplies of live cattle, live hogs. There's not an unlimited supply of industrial metals and things like that. So, and there's an infrastructure bill coming out, and electric cars. There's a lot of different demand factors coming in, right?
Exactly. Yeah, I think, of course, the whole lithium with the batteries, and all that stuff, the electric cars, and then, I think the big growth industry, if you look way out, even not that far, is going to be this whole climate change thing. It's going to be huge. It's real, obviously, and pick a place. Seawalls,
Yeah.
desalination plants.
No, and this Biden, he's talking about really making a big rollover to electric, and a lot of the the copper and the silver and stuff like that is used in the electric and the green initiative.
Exactly.
And then, of course, they are printing tons of money. I mean, $120 billion a month, is just unbelievable. We got 4,400 on the S&P, and they're still using emergency measures of accommodation. So,
yeah, well, that really is the big elephant in the room, and we should take a couple of minutes to talk about that today if we have the time, because that we're coming to a turning point. I just have that sense, and it'll be worth taking a look at that.
Yeah. Well, what is your opinion on tapering or anything?
Yeah. So David, to do a new screen, I do new share and then pull up a new screen. Is that how you do this? I haven't switched screens in between things. Here we go. Yeah, I can do this. Okay, here we go. So yeah, funny you should ask. I put together a few things here just to think about and talk about it. We'll just take a minute because it's real interesting, So overview, like we've been talking about, we've got this green flag and everything is good. We've had these few touches of the 50-day average going back, but on the surface, things are looking strong. There's no question about that. This Ichimoku cloud, I use that a lot. Same thing, it's looking real strong. And the interesting thing about this is it projects ahead. You see the price ending here, but then it projects ahead. So it's saying green through at least mid-September, and it's pretty reliable. It works pretty well. And then, so we've been talking about, we had record highs, a strong job reports to 943,000. But is that strong enough to change the Fed policy? That's the $9 million question, right? We got Jackson Hole at the end of August. We got the Delta variant, and you mentioned one time about the Treasury yields. How when they,
when they peak, sometimes the market rolls over afterwards.
Yeah. So, are we having a Mai Tai by the beach, or are we in shark-infested waters? And I don't know if you can see this screen too. This is pretty common stuff, but there's some interesting stuff here in CNN Business. They got this fear and greed index, and fear is driving the market. But when you look down at these sub notes, why? I think there's some real interesting stuff here. So market momentum is what we've been talking about. It's above the average, further than usual. So momentum's good. Still high junk bond demand. So that would be greed. VIX is neutral, like we just talked about. But then here you start seeing some fear things, put and call options, and you could address that, better than I can, the put call ratio. And then safe haven demand, there's, it's the weakest performance of stocks relative to bond in the last 2 years right now. So it was what we were just talking about earlier, the TLT versus the stocks. The breadth of the market's a little scary, like we've been talking about. It's just the FANGs and the bigger big cap tech that have been driving this thing higher. So it's the lower end of the range for this last 2 years. So weak market breadth, not breath, yeah, bad breath. And then the strength. So we got the number of stocks hitting 52-week highs exceed the number of lows, but at the lower end of the range. So that's fear too. So if you look beneath the surface just a little bit, we're making new highs on the Dow and the S&P, but you come in here and it's not looking that rosy, And I think that's really worth taking a look at and thinking about. And of course, we've talked about this before. Everything's overvalued. The Buffett indicator is all-time high. And you can see how these revert to the mean every time. So somewhere in here, you can make a bet that that's going to revert to the mean. Same
Well,
with the,
can you go back to that one last chart that you had, which all those indicators, because I think those, we shouldn't just glossy over.
these,
Yeah, these are very interesting. So the breadth of the market, obviously participation is narrowing,
yes,
and
and the strength, the
and
52-week high
the
lows.
number of new highs versus new lows on the New York Stock Exchange is at a lower level.
Yeah. So this comes into what we've been talking about. You know, you see the small caps, the transports, you get these divergences. Now you see this kind of stuff, kind of the internals beneath the surface. And those are significant red flags, you know,
Yeah.
and just tied back to what you're talking about, tapering, Jackson Hole come up at the end of August, the Fed meeting in September. And they're more and more, I mean, they're talking more aggressively about tapering. I don't know if you remember back the taper tantrum, and I think it was 2013 at Jackson Hole with Chairman Bernanke. You know, this is a gigantic bubble, and it's I think nobody wants to put a needle in it, right? So but with inflation and those things happening, maybe it's now. I don't know, but I mean, I don't have a crystal ball, but there's some real interesting stuff here to look at. You know.
Well, this stuff probably, either is telling us that there is something to fear, or it's going to be a deal where we go up to 4,600 and the only thing to fear is fear itself, right?
Exactly. Exactly.
So like
And it
this
really
is when
is.
they say a wall of worry, that's basically when you see the word fear, extreme fear, that's the
Yep.
wall of worry they're talking about.
Yeah. And it just boils down to the Fed, in my view. You know,
Yeah.
if they talk taper or start tapering, then that's a new world. You know, because I think everybody is pretty clear on that. And of course, with these overvaluations, you know, that I still believe in reversion to the mean. You know,
Yeah.
and
Then the problem is if they pull it back, is it going to be orderly, or is it going to be like gold where it goes down $150 before you can get a cup of coffee?
right.
And then you're trapped or you're caught. You know what I mean?
Yeah, exactly. Of course, they want to make it orderly, right? But
Yeah. I
how
mean, there's a lot
often?
of people owned Amazon, and I'm sure, with earnings coming out, they thought they were home free.
Yeah,
And, within an hour or whatever it was, you were
right,
down $400. So if
right,
you're long Amazon, you haven't done anything, you're trapped in there hoping it goes back up, right?
right. But I view this as a great opportunity. It's like the Roaring Twenties a little bit, you know, or
Mhm.
had a virus like the Spanish flu, this technology. Everybody's in the stock market, borrowing, faith in the Feds, overpriced stocks, and the famous quote, you know, that stock prices may have reached a permanently high plateau. So you look at guys today, what they're saying, Michael Burry, the big short guy, you know, the mother of all crashes is coming. Howard Marks the other day said, we're in an everything bubble. Ray Dalio, you know, biggest hedge fund in the world, says Fed can't tighten without having a big negative effect on markets. And we got this Fed governor, the new gentleman, Mr. Waller, says taper should be as soon as September if the jobs report stay good. You know, so you add all this up, you're looking at, and I was searching around to see what the Fed watchers, the experts say, and they're expecting November, December meeting to announce tapering.
Yeah.
They may hit that.
We're down to 5.4% unemployment. So it's not like we're at
Yeah,
any high number anymore.
yeah. Another one, Mr. Kaplan wants to start before the end of the year.
Yeah.
And I don't know if you follow John Hussman at all, genius guy. He's a PhD in economics. He's been kind of a perma bear for a long time, but he does valuation. That's what he does. He has some mutual funds. He says over the completion of the current market cycle, I expect the entire S&P 500 total return since 2000 will be wiped out. Specifically, I continue to expect the S&P to lose about 2/3 of its value. Now think about that, you know, and then Stanley Druckenmiller, Raging Mania. But these are not things to be afraid of. And that's what I want to talk about if we have just a few more minutes here. If this happens, which it may not, I mean, nobody has the crystal ball. That's a generation, really a generational opportunity, you know. And how do we take advantage of it? And I think people need to start thinking about that.
Yeah.
Do you want to just sit on the track and let the train run you over? You have to protect your portfolio. If you have a stock portfolio, obviously options can help you do that. If you can be aggressive and take advantage of this, if there's that kind of a decline, you know, that's worth thinking about and figuring out a plan.
Well, like I say, people have insurance on their house and they have insurance on their car, so they understand the concept, which is where you put up a premium, and if there's not an accident, you lose your premium. And if there is an accident, you go cash your ticket in. So the bottom line is that at this price, do people have any amount of money in their portfolio that might be worthwhile to buy some insurance, knowing fully well that you could lose the premium like you do on your house or car insurance, when it runs out and you haven't had an accident.
Right.
But it also comes in handy if it starts raining. And so, it's a personal decision people have to make, but it's certainly not a crazy one when you're at 4,500 almost on the S&P. And
Right.
some of these indicators of breadth and new highs are indicating a little bit of a slowing down of the power.
Exactly. So I think, again, this Fed thing, and this has been going on really since, the last crash, and they've been inflating this thing. And a lot of
Yeah.
people think they should have started tapering a long time ago. I read a headline, I didn't read the article, Mohammed Al-Aram, he was the PIMCO guy, and he's calling for tapering. I mean, a lot of people are joining that chorus. So but I think let's take advantage of it. There's always opportunity,
Yeah.
I think that's a key element here.
And like I say, you do have a couple of sectors already showing deterioration, particularly in the transports and the small caps. Of course, that could change. Like I say, if we start blowing out these highs and going to 4,600, they'll probably drag the transports and the small caps with them. But that's why I was thinking in the next few weeks is very important, because this thing is going to have to hold its water and make some progress. Or if it starts rolling under 4,400 and 4,300, I think there'll be quite a number of people trying to get out. Not unlike when the people are trying to get out of gold and silver, and the door is pretty narrow.
Right, exactly.
If
So
there's a great reason to sell, and you get volume coming through the door, the guy on the other side of the trade is not going to be there handing out his money for free. He'll drop that bid, and
right.
that's the way the market. That's how you get these big jumps and big drops. In other words, how do you get a big jump of 15% in Moderna and BNTX today? Because the volume is all on the buy side, and the guy on the sell side is going to say, "I'm not going to stand in front of this avalanche. I'm going to raise the offer as high as I can, and then I'll take that stock in, and then hopefully I'll be able to get out when the volume dries up, because it'll pull back on its own weight."
Yep. So I think it's a two-pronged strategy, a diversified strategy. We have to be defensive. That's
Right.
my view, like we just talked about. And you
Right.
can be offensive. We can take advantage of this. If there's that kind of a decline, I mean, look at how much Michael Burry and some of those guys made on the housing crash in
Yeah.
08,
Yeah.
Those are generational opportunities.
Like I say, there's no evidence of that happening, but there's certainly, if the news were to change and we are at these extended levels, and if when the volume comes in heavy on one side or the other guy on the other side of the trade, he just backs away, which means if the buying volume comes in, like those two stocks I mentioned, the seller is just going to back away, raise the offer as high as he can, and take all that volume in. And at the end of the day, they figure that there's not much volume behind it. So it probably is not going to sustain itself, because after all these people bought, there has to be more people to buy at the higher price to keep it going. Same thing on the downside, like when we had the crash, people were just selling everything. So the guy on the buy side, which are, the market making kind of guys, they're saying, listen, we'll take in all your stock at 2175 on the S&P, because after all you guys sell, I doubt there's going to be another group of you.
Exactly. So I'm going to be paying real close attention to Jackson Hole. I didn't get invited again, which is annoying, but I'm going to listen to
They got good bars and restaurants in Jackson Hole. I was there once before.
It's a great town.
Yeah,
it's a fun town and great place, and I as well. And so I'll be watching to see what goes on there. And then, of course, I always think, Labor Day, the end of the summer, it's almost like the second New Year. Everybody comes back from vacation, and it's the fourth quarter is always lots of action. And then the September Fed meeting will be pivotal. And then, like they say, these Fed watchers saying November, December, the market will front run that. So if we're going to see a change in the weather, it's going to be September, October, which of course is
typical.
Historically, the time of bear market crashes, right? So I think, but I'm excited. I mean, we got great opportunities ahead or whatever happens.
Yeah, and like I say, you don't have to play it one way. If you have enough money to diversify, you can kind of have a few different scenarios out there. And if they're
Exactly.
limited risk scenarios, you can only get hurt so much on any one that wouldn't work out because if you're
Right.
using limited risk strategies, which probably makes some
And that,
sense.
and that's really the key. I mean, risk management is everything, it's like we talked about before. It's, if you don't blow yourself up emotionally and financially, you'll survive and eventually you can be successful. It's
Yeah, I
getting,
mean, just imagine the people that were in Amazon up at 3,700, had they taken some money and
right.
put it into insurance when it dropped to 3,300, they might be losing on their stock, but at least they have something working to offset that, right?
Yeah. And that again is uncorrelated strategies and uncorrelated assets. I mean, that's really the name of the game. Let's take a look at Amazon. You just mentioned it. We have just a minute left here, but yeah, so you can see that thing went down and now it's just tracking sideways.
Yeah.
I didn't follow that. Was this an earnings thing that happened? I was right around the earnings.
I think it was earnings, but more about they use the dirty word slow down.
Oh yeah, slow down subscribers or whatever.
So slow down in activity and
Right,
slow down. So
right.
as soon as you use the slow down word, they take the Ginzu knife to you.
Yeah, and of course the fangs have been driving this thing for a long, long time. And I add on to the fangs. I add on Microsoft and Tesla, and but,
Yeah. All right. Well,
yeah.
let's give everybody a good way to get a hold of you and take advantage of some offers that you might have and go from there.
Well, I appreciate it. So, David, if you just put up the tradinggods.net basic homepage link, please. And there's just an ebook there. The easiest way to get in touch with us is just sign up for the ebook. It talks about selling options. There's also a contact form. If you want to contact me directly, please do that. And then that gets you into our program. We have a couple of newsletters a day, and we do a webinar on the weekend and all kinds of educational stuff. So that would be the way to go.
Okay, perfect. And for Option Professor, again, you go to optionprofessor.com and you put your email in and you get all the different stuff that we offer, including a market update across the board that we send out each week. That's optionprofessor.com. Great to be with you, John, as always. We'll have another run at this thing at some point. David, I'm going to turn it back over to you. Everybody have a great day.
Thanks, Prof. Always a pleasure. Have a great week. Enjoy the rest of summer, and it's awesome. Talk to you soon.
Okay, thanks.
All right. Thanks, guys. Ton of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app, or you can also just go to TimingResearch.com to get access to the archive of today's show as soon as I can get it posted, as well as any of the past shows and events. And I just want to thank my guests again for today, John Nyaradi of TradingGods.net and the Option Professor of OptionProfessor.com. Thanks, guys.
Thanks very much, David. Thanks, everybody, for joining us. Take care.